Good morning. My name is Joanne Mendoza with Berkshire Hathaway. I'm a real estate broker. Happy New Year. Today is January 9th, 2018, and what an amazing year it's going to be. I'd like to share with you some of the changes that have taken place in the new tax reform law. And I think the changes are great for some and not so good in other areas. But for the real estate industry, because home ownership is such a vital commodity for most individuals, I know that it still generates a lot of interest and demand. Like it's 2018 and it's been raining like heck for the past couple of days, and yet demand is so high. I'm working with a multiple amount of buyers myself who I am having problems getting into contract because there is so much competition still out there, even in this winter weather where things are supposed to slow down, but not here in California, in Contra Costa, in the Bay Area, where supply does not exceed demand. So just want to give you an overview of what the prior law was and the new law is to date. The mortgage interest deduction was capped at $1 million, and to date it's now gone down to $750,000. The state and local tax deduction, which they call SALT as an acronym, deduction, was unlimited. To date, you can only deduct up to $10,000. There's been no change to the exclusion of the capital gains, so it's $250,000 for single and $500,000 for married, and I'm glad there's no change to that. There's also been no change to how long you've been in your primary residence, so 2 out of the 5 years you'd have to have lived in the property. They were going to make the change a lot longer, but I'm glad that remained the same as well. 1031 exchanges have stayed the same. If you have any questions regarding 1031 exchange, you can reach out to me and I'd be happy to help you, along with any of your questions to any of these new tax changes as well. The personal deduction was allowed prior, but to date it's been eliminated. So you can no longer deduct any of your personal deductions. Darn. The standard deduction prior was $6,350 for an individual and $12,700 for a married couple. Today it's changed. It's actually gotten better. So it's $12,000 for an individual, $24,000 for married, and $18,000 if you're head of the household. For mortgage interest deduction for second homes is the same to your primary residence. So it was capped at $1 million before. To date, it's now $750,000. This is kind of big. Your HELOC loans. These are the ones that are attached to your first mortgage. You used to be able to deduct the interest on these, and now you can no longer deduct these except or unless the proceeds are used to substantially improve your primary residence. The moving expense exclusion and deductions, the deduction for moving expenses, prior law, you were able to do that with change, if you had to move from your workplace. It's been eliminated to date, except for the members of the armed forces on active duty that move pursuant to military orders. Another thing that I think has been good is the child tax credit, which used to be $1,000 for each child. Now it's $2,000 for each child. This is one that I think is good as well. Deduction for qualified business income of pass-through entities, including independent contractors. You used to not be able to deduct this. There were no incentives at the time. Today, you can deduct 20% of taxable income phased out above $157,000 for singles, or $315,000 if you're married, for brokerage services. Now, make sure you speak with your tax accountant, a CPA, someone who's professional at this, to get some more information regarding these deductions, as well as any of these things I had mentioned, so that you're filing your taxes properly. And that's it for today. Thank you very much, and make homeownership still your dream. My name is Joanne Mendoza. I am in the business of connecting people with their dream home. So if you have any real estate needs with buying or selling, don't hesitate to pick up the phone, give me a call, text, or email me. Thank you so much. My number is 510-409-7914.